Good weekend, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the weekend edition on Friday, the 23rd of February, 2024. My gosh, another great day in stocks. You saw the NASDAQ give back a little bit today, but, it's been up so high it can afford to do that. You haven't done any real damage there. You had a breakout of types in the metal markets, in the gold and the silver. The copper market has backed off, but it's had a heck of a run since the lunar holiday. A week ago today, I was telling you the Chinese traders would come back from the lunar holiday, and I kept warning my traders, at least in my morning subscriber video, I don't like being short when they come back. Sometimes they do some buying, and I think that's what's taken place. A question we're going to have to ask ourselves is the dollar topping out here. It's lost its punch against the 104 area, and you're seeing a little bit of stall in the other markets as well. So that becomes interesting. Today we saw energy markets take it down. We're still beating up in the grain markets. The question in the grains, planting season's coming. Soon you'll be talking about, are we getting too cheap? The crop's not been made. It isn't even in the ground yet. That type of talk is the normal thing that you normally get. However, you're competing at this point with a relatively high dollar against most foreign currencies and a crop out of the southern hemisphere. It's not the place to be at this point. Bonds and notes, all of a sudden, a big reversal day. Well, there's some key economic data next week. Remember, I kept telling you the PCE we're going to get and other data coming out. So you want to pay attention to that. Speaking of the data, on Monday, you're going to get new home sales for January at 9 in the morning, and we're going to get the Dallas Federal Reserve monthly manufacturing outlook, and that's going to come out at 9:30 a.m. Then later in the week, we're going to get more of the regular talk. Excuse me there, I didn't mean to do that. There we go. So that's what we'll be looking at. We've had a lot of Fed talk, and as you know, Fed members are almost universal in what they're saying, that there'll be a time to cut. It's not right now. The market doesn't need it. They're not seeing the data warranting it at this point in time. In Europe, we're seeing the arguments that now they are fighting there. Should June be the time? And that's the big question. So everybody's trying to balance things. The question in the euro, have we seen the worst in Germany? That's going to be a big question. And it's looking more and more like maybe we're getting stability there. So if we take a look at the S&P, how could you be anything but friendly? For the month so far, and we're at the 23rd, so we're coming up at month end this week, we're up 4.74%. And this market has just been on an absolute tear since October, and the market has just run away, basically 800 points. I mean, just a dramatic move to the upside. You've been over the 18-week moving average of closes this whole time, basically go back to November when you crisscrossed. And remember, that's how I told you bias is formed, at least on my charting technique. Once you're over it, I'm instantly looking for buy signals. When you're under it, I'm automatically looking for sell signals. How do you argue with this? I mean, it's straight up. Where would you put a stop is your problem. And that is the problem in the market. So, some people will have to play this. If they're long, some people will write calls to do different things against their positions. But it's higher lows, higher highs, still running the market. All the moving averages, you're underneath everything. So where is the resistance? Likely the Bollinger Band top. And that's higher at 52.24. Now, you know how many different brokerage firms have for their year-end target was 5,200. You're quickly approaching it. Are we getting a bit overdone is the next question. You have an embedded reading. I believe momentum leads price. So when and if the red line looks like it's going to then close under 79, then I think the market is telling you it's priced in all this good bullish news and it's time to consolidate or go sideways or get a small break. You're not there yet. That is the point that I'm saying. The most difficult thing on the weekly chart is if you make the higher high first. Let's assume you open up on Monday and you make the higher high. It's very hard to buy the market on the break the rest of the week. That becomes the difficult part. It's easier to buy if you don't make the higher high first. You have the same chart pattern in the Dow. Same statement that I have to make there. In the NASDAQ, the identical statement there, no change. And in the Russell, this is not quite the same statement. It's an overbought market, did not embed. It hasn't even caught up to the rest of the indices. I keep hearing, and I was listening to the end of the day today on CNBC, how many traders long-term are buying the Russell, and they're saying eventually there'll be the catch-up. Eventually, though, they will be right. But in the meantime, they've parked money that hasn't participated with the other indices. That is the point. Do I think they'll be wrong in the end? No. I think that, once the Fed does start cutting rates, we have another secular bull market coming at us. In the 5-year notes, the market has gotten down and fighting now at the 18-week moving average of closes. The momentum is down. You can see how the market here hasn't been able to do anything and get up to these numbers at all, not even to the 100-week average. And it's not in a trend per se. It's got a higher high and a lower low. So we've had the spike down after this huge rally where the market got ahead of itself. Remember, 6, 7 rate cuts in 2024. Now we're down to, will there be 2 or 3? In the 10-year note, it's the identical thing. Same exact pattern there. In the dollar index, this is what's got me concerned. Suddenly we're stalling out between the 100-day average and the 18. I don't have a sell signal. You don't see one on that chart. It's still absolutely higher lows, higher highs, and you're over the 18-week average. You are getting into overbought territory. You have a 70 reading. So it's a difficult market to say to do anything in. That's become the problem. In the eurocurrency, if the dollar's having a problem, so will the euro. And you can see it's fighting also at this average, trying to figure out the next move. In the Canadian dollar, if this market cracks 73.63 on a weekly basis, that could be another bear signal. It has fought to stay above the 18-week average this whole time, and it did it at weekend too. It finished 74.09.5 over the 18-week average. Momentum is down. The trend is down as measured by the swing line, but the bias is still up. So the question is what happens? Now, let's assume it doesn't do that, and it clears right through here, the 74.90. Then you have to look at the next resistance being the 100-week average. In the Japanese yen, everybody said it couldn't keep going lower. Well, these are new lows, and it can't. Now, we all know that everyone is looking, and don't forget, at how the labor unions do in their negotiations in March. And we'll have an inkling of that before we know what it is. So yes, I am still very much in the bear camp. However, all my horns are up. I'd want to cut positions down. Now the question is, can it reach the 65.25? It's already in oversold territory. You don't want to overstay your hand, but there's no reason to be long at this point. There is still reason to be short. Bitcoin. I noticed, and I told my subscribers this morning, I said, you got to be careful now. I said, on the weekly chart, we have stalled out against the upper Bollinger Band. Momentum is waning at this point. This market might be ready to give you a pullback at any point here. It's not in a trend on the weekly chart. You have a lower low and a higher high. We're not blind. We see we had a breakout from the upside, and the market has soared to the upside. So don't get me wrong when I say that. But now, suddenly, even when you go to the dailies, you're seeing that the distribution is starting to happen up here. I think the market's having great trouble getting beyond this 52,000 level. In the Brent versus WTI crude, back up and fighting at the 18-week average, the differences between the two. And even with the pullback today and all the energy, you haven't given up anything. Now, what could happen here is if we take out this week's lows, we will end up with a pattern of higher lows, lower highs. So we'd be narrowing in like that in the market. And as you can see, you're already overbought. We are looking to hear from OPEC this week. There'll be all kinds of talk what they're going to do. The early word is that they will hold at the approximate 1.9 million barrels a day, hold back, that they won't increase their production. There is hope that maybe Israel and Hamas can reach some form of a truce for a whatever period of time, the beginning of something, maybe longer. I know that the Israeli negotiators did go back to the table. Now, whether they stay there or not, I haven't the slightest idea. That's just too fluid of a situation that we'll all have to keep watching. In the WTI, it's pretty much the same type of story, overbought, still in an uptrend, but you could end up with that pattern that I'm saying. In the heating oil market, I think now it's the battleground. You can see how the Bollinger Band, see the black dashed lines, how they're wrapping their arms around the market. You're taking volatility out of the market, as the market probably wants to start just concentrating more on the gasoline part of everything. Want to remind you, this is a great time for you to take advantage of the free offerings that we have. If you go to our website, iraepstein.com, and go to the free offerings, all you do is click on any, it puts it in a basket for you. Then when you're through at the bottom of this page, you'll see you put in your email address, your name. We mail everything out to you typically within the next business day. And if it's a weekend, it'll be probably Monday that we get to that for you. There's so much to choose from here. Try our charting. Try our price counts. You won't see these anywhere else. And when you get vertical moves like we're having, these are beyond... They're the best tool I've seen when you go parabolic in markets. Gives you an idea where the market might be heading. It is not a tool that says you buy here, you sell there. It's where the market may end different steps in the marketplace. In other words, it goes up, where's the first stall, the second? Where might it ultimately end up? Those are the points that I use it for. And you'll see my research, if you want to give that a trial. You can try the S&P or the morning subscriber video in the futures. You choose from it. You got about 10 to 12 choices there. I'm Ira. You have a great weekend. I'll catch up with you all come Monday. Take care.